I'm Jim Jubak, and welcome to my YouTube video for January 7th. Welcome back after the holidays. I got a new t-shirt for the holidays. The other thing that's of interest is I've got my coffee tree back there. Coffee futures right now are sliding on expected good harvest from Central America. So I've got about 2 more years to go on this, but I expect that to make a bundle out of the 8 beans that I produce on this tree. The other thing to remember is if you want to go to my site and get the 3 portfolios that I track there, that's my free site, jubakpicks.com, my paid site, jubakam.com, with 6 portfolios. You can see the links to both of those down below. Of course, if you like this video, please like it, subscribe to my YouTube channel so that you get notification of when I do the next one of these, because we're now back in business after the break. Okay, today I think the burning question for all investors and traders is, when does the tech selling stop? So that's what we're going to call today's talk. And I'm going to give you 3 picks to watch right now and to buy when the stock market has stabilized and we've seen something like the bottom. Okay, the good news and bad news. Okay, the bad news is that hedge funds are selling their tech positions at a rate that's the highest level in dollar terms in 10 years, according to Goldman Sachs. They're just dumping these little suckers. And the selling is primarily in software and semiconductors, 2 of the most exciting in terms of return sectors of 2021, but they're dumping them. That's the bad news. We know the tech stocks continue under pressure as hedge funds dump them. The good news is that hedge funds are not slow-moving animals, so that we're going to get a pretty big turn relatively quickly when the hedgies decide that they've sold enough. And we can track some of this pretty carefully. One of the things that we're looking at is something called overbought, overheld, if you will, stocks versus underheld. This is where the hedge funds are most out of line with, say, an index like the S&P. And so this is a really good indicator of where the selling has kind of been concentrated and where the selling might be closest to an end. We know that what are called the least crowded trades right now, these are the stocks where we can start to look for some bottom, are in the top. So let's look at a chart. These are the top 5 least crowded trades at the moment. This is as of the 6th, so as of yesterday. One of them is Amazon. You notice that what you can see here is that it's least crowded because people have been selling it. So this was on November when it was at almost $4,000 a share, and it's now down to about 32. Another one to look at is NVIDIA. Again, one of the most popular stocks in the market in 2021. But you notice again, what you're seeing is that this drop from 334 in November to about 273 today is one of the reasons why it's on the list of the 5 least crowded trades. A last one that I'd like to look at there is Microsoft. Again, you see this big drop here, a sign that it's being sold off. 2 other stocks that you might want to watch that are on the least crowded list are Tesla and Apple. There's a companion list to the least crowded trades, and that's the most crowded trades. And I think what you could say about these is that these are stocks where the selling has either not completed itself or has completed itself and hedge funds are now rebuying it. On that list, you get Visa, United Health, Schwab, MasterCard, Netflix, American Express, and Danaher. These are stocks where I would say that we're not really looking at the end of the selling, with the exception of maybe Visa and MasterCard, where I think these are sold off enough so that we're starting to get a bounce. Now, we're always looking for corrections, trying to figure out, well, when we get a correction, when we don't get a correction. If we slice and dice the market so that we're looking at the top 10% of the Russell 1000 index, so these are fairly large stocks. The top decile by PE, so the highest 10% of PEs in the Russell 1000 are already down 7.8% for 2022. So that's a we're moving toward correction territory. So that's something to watch as we go forward. This has been a sale in high PE stocks by hedge funds, and we know about hedgies that they turn around on a dime. So watch for that turn. This is Jim Jubak. That's for watching. As always, you can find more of my stuff on my free site, jubakpicks.com, or my paid site, that's 6 portfolios instead of 3, jubakam.com. I'm starting to put up the performance numbers for 2021. I've already posted the performance for the dividend fund up about 19% for 2021. You can find that on the free and on the paid site, as well as the full portfolio. Thanks for watching.